First item on our agenda is actually Election Day. That's coming up on November 5th. Be prepared to vote. But regardless of what side of the aisle you fall on, I think we can all agree this will be quite an election. And because of what's at stake in terms of policy shifts, I actually really feel that Election Day and even a few days following Election Day could actually bring about some real market jitters. However, I am extremely confident that regardless of who wins, we will continue, or should continue at least, to bet on America, just as Buffett always shared. So don't let any of the hype or the fear out there scare you from staying your course as an investor. A matter of fact, investors, if you're rocked by fear, use that to your advantage in knowing that our economic environment as a whole has actually been improving. I mean, as of this video, we're right on track for another interest rate cut. Inflationary data hasn't set off any alarm bells over at the Federal Reserve to reverse course. And even if that was the case, as long as you're not retiring in the next year or so, well, you really just have time on your side. So again, as an investor, stay your course. But if you really want to prep yourself for Election Day, or you're in fear of how the market may shift, a contact of mine, the chief investment strategist over at the Oxford Club, Alex Green, who actually joined me on Masters of the Market once before, is hosting a webinar alongside CNN's Bill Tucker, which is completely free for you. So you can claim your seat with the link that's down there in my description. I, of course, will be there. Anyhow, let's go ahead and run through some of the dividend stocks that I want to have your eyes on during November, or even worth the buy as we speak if you're looking for dividend stocks to buy now. We're going to kick it off with some of the discounted opportunities. First up, Genuine Parts Company, ticker symbol GPC, which is a company that distributes automotive and replacement industrial parts as well as materials. So think about this literally as anything under the hood of your car, like hose lines or fittings, hydraulic system parts, mechanical power transmission, pumps, and just general equipment for safety, seals, gaskets, or tools for testing instruments. I'd really like to say that this is a stock that we wouldn't really deem as sexy, and therefore we often pass it up, but it's incredibly lucrative at an attractive price. And right now, well, from what it looks like, we're at that price. We can see it's down from the highs of around $150 per share to a current share price here around $113 per share. However, if we're long on it, we're going to go ahead and click on the 5-year view to see steady appreciation, and work your way here to the income statement with me to see what matters more than a share price, which is revenue pouring in consistently, as well as a very clean balance sheet, whereas assets are consistently outweighing the company's liabilities year in and year out. But we are here for the dividends, so dividend stat wise, we're going to go ahead and take a look at Simply Safe Dividends to see we get a solid safety score, a dividend yield coming in at 3.5%. Now some metrics to note. We have a payout ratio here at 45% and a dividend streak that comes in at 67 years, while the company continues to grow its dividend by an average rate there of 6% year over year. Not too shabby. However, if Genuine Parts Company isn't necessarily up your alley, I want to go ahead and put IDEX Corporation, ticker symbol IEX, on your radar. This is a company that operates through 3 segments. We have fluid and metering technologies, health and science technologies, as well as fire and safety products. It's ultimately another under the radar type of flying dividend stock, but powerful when it comes to growth. And as a former firefighter, one of their products, the Jaws of Life, which you may or may not know, I can attest is a daily lifesaver for us all. So that's what we're working with a company like IDEX Corporation. Don't overlook it, but it often goes under the radar. And right now, IDEX is actually down by over 5% on the year, trading for $202 per share. However, click out to the last 5 years. You're going to go ahead and get a glimpse at its real growth potential, coming in with over 27% worth of appreciation. Scroll down with me. We will discover a solid income stream on their income statement year in and year out, along with a clean balance sheet with $5.8 billion reported in 2023, with only $2.3 billion in liabilities. But I mentioned IDEX is a solid dividend grower as well. So let's go ahead and click into the dividend metrics and discover a dividend stock that boasts a safety score of a 95 and a 1.36% dividend yield. Scrolling down, we're going to go ahead and find that payout ratio to come down to 34%, along with a dividend streak of 21 years, while the company has averaged a 12% growth rate over the last 20-year period. But if you want to keep to what you know for personal comfortability, if you will, there's still time to get your hands on Pepsi, ticker symbol PEP, which most of you think as just a beverage kingpin. I know I did, but it's much more than that, as they have another segment, the salty snack segment, bringing in even more revenue than their soft drink segment. Now, it has, along with a lot of its peers, had a fair share of troubles over the last few years from consumer trend shifts, higher interest rates, and overall inflation, but it prevailed. Right now, Pepsi is trading for $171 per share, which is not down significantly by any means, but I could see a pickup here in a new economic environment, which is important. However, click out to the 5-year view and we're going to see that solid performance with over 25% worth of share price appreciation coming right down to Pepsi's income statement, obviously one that produces as one of the largest companies in the world. But better yet, we're going to go ahead and take a look at this clean balance sheet that reflects its health as assets trump liabilities year in and year out, though I'd like to see an actually greater difference between the two assets and liabilities. And if we go ahead and click right into Simply Safe Dividends, we're going to get a nice safety score, a 3.16% dividend yield, scrolling down to a payout ratio, which is on the higher side for consumer staple investments at 66%. However, a nice track record worth of dividend payments spanning over the last 59-year period. And then we get a double-digit growth rate here, on average of it, at 11% over the last 20 years. Now, investors, some personal YouTube stats from me to you depicting that just about 71% of you keep tuning in, watching my videos day in, day out, week in and week out, but you haven't yet subscribed for whatever reason. Now, if that's you, someone who isn't subscribed, I want to ask for your help directly right now to do just that, as it really helps me and this entire community, especially as I devote more time to all of you with these videos. And while you're at it, go ahead and let me know that this video is actually bringing you value by tapping on that thumbs up button. Now, before we get to the remaining 3 dividend stocks, I also want to go ahead and let you know that I'm finalizing my latest venture, which is the Wall Street Word, a newsletter from me to you that's packed with stock ideas, not just dividend-specific stock ideas, but then we also get Wall Street insider insights. So feel free to subscribe early. The link is also down there in my description. With that, let's kick back into it with Warren Buffett's pick, Diageo, ticker symbol DEO, which is a business that produces and sells all of your go-to alcoholic beverages, offering scotch, gin, vodka, rum, liquor, wine, and tequila with brands like Johnny Walker, Crown Royal. We have Smirnoff, Ciroc, The Captain, Bailey's, Don Julio, and plenty more under its belt. Now, if we pull up Diageo's stock chart, we see a company that is deep in the red here, trading for $133 per share, which is down by over 7% on the year there. But unless we really go back to the days of bootlegging and prohibition, I really don't see the market for alcohol disappearing anytime soon. However, I do see room for improvement in terms of the business itself. Nonetheless, I want to have you scroll down with me, and we're going to go ahead and see a healthy revenue influx year over year, with a balance sheet also depicting health, with assets coming in at over $45 billion while liabilities remain well below $34 billion. And surely this dividend income will be enjoyable for you as you kick back and maybe have a drink or two. A perfect score of a 99 in terms of a safety score, a solid 3.09% dividend yield, all on top of a payout ratio of 58% and a 26-year dividend streak, whereas this dividend has been growing by an average growth rate of 7% year over year. Next up, I want to go ahead and talk about a healthcare play with you that's really been beaten down from our economic environment, but it does remain an outstanding dividend stock for the long-term investors out there. We have Becton Dickinson and Company, ticker symbol BDX. That specifically is focused on just medical devices and medical instruments. I would say it's really a similar play to Medtronic if you're familiar with that stock. I've spoken a lot about it here on the channel, but based on cost-cutting measures that have been in place for a lot of their clients, well, we're talking about Becton Dickinson really not faring well, and it's right now down, trading for $240 per share. Now, clicking into the 5-year chart, we're going to see that the company really doesn't check out of the lows and the highs of these ranges, but if you catch it now at a lower low, you'll love the dividend returns from it, which we're going to cover in a hot second. But scroll down with me because I want you to get your eyes on the healthy flow of revenue year in and year out, along with their balance sheet that details the health of the company, even though we wouldn't think it's so, again, from that stock chart that we just saw. However, let's click right over to Simply Safe Dividends, and we're going to get a dividend safety score of a 91, a dividend yield coming in at 1.6%, meaning we ultimately will get more dividend growth from this stock in the future. Scroll down with me, a nice payout ratio coming in at a low of 29% after 51 years worth of a dividend track record and a nice 12% average dividend growth rate. Finally, I'll leave you with something sweet, and we'll break down Hershey, ticker symbol HSY, which has been hit extremely hard from the cost of higher cocoa bean prices that have ultimately resulted in a hit to Hershey's bottom line. And just clicking into the company's stock chart, we will find that Hershey right now is trading for $181 per share. That is down by roughly 5.6% on the year. Yet let's go ahead and click out to that 5-year view where we're going to see a nice 26+% gain in terms of appreciation. And scrolling down, plenty of revenue coming in each year thanks to Hershey just having a product that we all cherish and enjoy. Now that results in, of course, a nice solid clean balance sheet as well, which we're going to see assets that outweigh liabilities liabilities time and time again here. But let's go ahead and jump right into Simply Safe Dividends to get some dividend stats. We're going to discover a solid safety score and a sizable 3.02% dividend yield. Coming down here, we're going to discover a 57% payout ratio, a 94-year track record when it comes to paying out those dividends, and Hershey coming in hot with a 10% average dividend growth rate over the last 20-year period. Now, investors, go ahead and drop your thoughts on these dividend stocks down in the comments below. Let me know if you're interested in buying them, ready to eye them down, or have better dividend stocks in mind. Be sure to tune in right here to discover the one question I think all dividend investors ought to be asking themselves. If you haven't already, subscribe to the channel, and with that, I will catch you all in the next one.